Hello everyone, friends. Hello everyone, friends. Today I will show you a super easy and simple crypto strategy and Forex strategy that you can use to make big money because it has a 95% win rate with only 5% of those small losses that can happen. It also has a risk management ratio of 1 to 3. That's quite a high risk management ratio, probably for crypto and especially for Forex because, for example, if we lose $1, but from one trade we win $3. And keep in mind, we have a 95% win rate. I want to emphasize that. And this strategy is based on the fact that we open the chart on any time frame. But it's better to use the 15-minute, 30-minute, 1 hour, 4 hour, or even higher time frames because the 1 second, 1 minute, or 3-minute time frames don't really work well. And as I said, the 2-minute time frame, don't use the 3-minute time frame. Start from 5 minutes, but preferably from 15 minutes and up. We don't use the 30 or 45-minute time frames. Well, we also don't use those 2, 3, or 4-minute time frames. You get the idea. For example, if the time frame doesn't work out, I choose another one, go further, and we keep looking. We go and analyze the chart, see how everything is progressing. We need to find the points. The main points are where the market is moving up, basically, and where there is liquidity. We look for liquidity on the chart, which allows us to find the better entry point for our position. We're not just looking for some strategy, we're looking for where there is liquidity, where everything is, so that when we enter, we know for sure that we'll win in this trade. So that we understand that if we enter, for example, if we enter here, right here, we know that there's liquidity here. We know that if we enter, we'll go up rather than entering here, getting a little bit of profit, not locking it in because our stop is somewhere here, and then just getting stopped out and dropping down. That's a very unfortunate story, friends. I know that many of you do the same. You set a very tight stop, you take on very large risks, thinking it will never happen. You take profit because you set it super, super high, friends. And for this, we need to look for liquidity. From liquidity, you can set your stop very close because the liquidity is right here, for example. We set the stop right here. Here's the stop. Look. We set the stop right here. We enter, for example, right here, friends. Look. Because here we have liquidity. I'm not showing you like those info gypsies do. I'm not telling you to enter here just to set a stop like this. I'm not an info gypsy. I'm showing you real charts. We enter right here. We set the stop. I'm just showing an example. I'm not saying there's liquidity here. Maybe there is, maybe there isn't. I'm just showing you how you enter. You just enter and set the stop however it suits you. So that it's not like this. The stop has to be set properly. To make money, you need to set a proper stop. The line is always in our area. Sometimes we set it at 2 or 3, but I always set it at 2.5, kind of the golden mean. This one, obviously. Let's move on. I'll show you our strategy. Our strategy is to find imbalances FWG, which shows us our liquidity structure. The liquidity structure, look, we take and look for an unfinished FWG. Just look. FWG, what is FWG? It's this, you see? There's a little square here. This is called FWG. One day. FWG, one day on the chart. Look, FWG is, here it's the collection of liquidity from banks, from these marketers, wealthy people. Here it is unfinished. And they know that it's right here. Here, look, we have 3 examples. This is FWG, this is FWG. Look here, I'll show you. How many FWGs do we have here? We have 3 FWGs here, like this one. And another one like this below. See? And from one of these FWGs, the price can bounce. See? The chart rises upward, then it descends, then it goes, then it rises again, and finally it goes up. And when it goes down the chart here, then from here the chart goes up because it pressed against the FWG. Now I'll show you everything clearly. So look. Down stood a. Okay, got it. Look, the chart will take it. Here, FWG. It went up. It went down. See, it touched the FWG. The middle line of the FWG. I always enter at the middle line of the FWG. You can set it up the same way in your settings. You will have the middle line of the FWG. Look, I'm entering a long position, and look what a great long we have, just perfect. I always set the entry point right here. Well, sometimes look, your upper FWG might not work for everyone. It might go down to the lower one and then go up. It might go even lower and then go up. That's why I always say, set it the way you think it will happen. You can also see it went up, then pulled back a bit, and here again, liquidity remains. It returned to all the liquidity of banks, marketers, and all the very wealthy individuals. And then it went up again from above. It came back again, you can see what it did here. So next time it could do the same thing. Here it almost reached but still went up. Because the banks started buying up from the liquidity. All the banks, everyone does this, the wealthy people. Here you see it also went down, reached the middle, again to the liquidity, and then went up. Next you see, here it didn't go up as much, so it started to fall, reached new liquidity, you see, to a new medium FVG. Look how it shot up from there. Just look. And this position I'm showing you, you see, I can already read these FVGs through and through. Just look at how big this FVG is. The bigger the FVG, the stronger its momentum. Look at how it reacts from the FVG, just like that. You see, it touched the inside of the line and just shot upward. This is called the FVG strategy, friends. I'll be grateful if you use it and get richer together with me. Let's do it. Don't forget to like and subscribe. See you next time. I'll publish the next strategy for you tomorrow. A new one that I use. I use many strategies, but this one is among my most profitable. Alright, let's make a lot of money, everyone.